Hey everyone, super microcomputer stock has been one of the most to benefit from the rising effectiveness of artificial intelligence and the AI investing frenzy of 2023 and 2024. So understandably, investors want to know what's going on with super microcomputer stock, which I will elaborate on in this video, discussing their revenue growth, their profit growth, and how they're responding to the surging demand for their products and services. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Supermicrocomputer CEO Charles Liang said that they achieved another record-breaking quarter. Revenue of 3.85 billion was a 200% increase from the same quarter last year, and non-GAAP earnings per share of $6.65 was a 308% increase year over year. So yeah, like I mentioned, Supermicrocomputer, one of the prime beneficiaries of the rising demand to implement AI products and services. They could have done even better for the quarter actually, but they faced some supply chain challenges with some of their new liquid cooling solutions that they provided in the latest quarter. So if it weren't for supply chain problems, they could have even demonstrated stronger growth in the quarter. That's how strong demand is for its products. Now, I've been saying this over and over again with artificial intelligence companies. You've seen the rising prices for AI stocks, but what I've been doubling up on is reminding investors that those price gains have been substantiated with tangible evidence of growing performance, like a 200% increase in revenue and a 300% increase in profits. Those are tangible gains in the fundamental business. It's not just the stock price being dislocated from reality and jumping just based on hype or some enthusiasm, or as is happening today as I'm recording this, the meme stock frenzy is back in fashion, as Roaring Kitty made a post and it sent GameStop and AMC shares soaring again. For what reason? Because Roaring Kitty made a post about, I'm not even certain how that connects to the value of a business, but nevertheless, there it is, stock prices soaring by 60-70%, and it's dislocated from the actual business performance. That's a whole nother category, a very dangerous category to be a part of. Whereas if you're investing in a company that's demonstrating a 200% increase in revenue and a 300% increase in profit, that's a much more prudent investment. That's a much more justifiable reason for a stock price increase. Now, I will admit there are other reasons why those stock prices are soaring, and there are other reasons why stock values increase. It's not only connected to revenue and profit, but those are areas I don't like to delve into frequently because of the higher risk associated. Now, to respond to this soaring demand for its products, the management is saying that they are making significant investments in productions, operations, management software, cloud features, and customer service. They raised an additional $3.28 billion through a convertible note and stock sales in the quarter. So, what management is doing here is, as they're noticing the business growing rapidly, they're investing in expansion so that they can support this level of growth going forward. They want to be able to serve the customers that come to Supermicrocomputer. They don't want to turn down customers and say, you know what, we're all booked. We don't have any more supply for you. You're going to just have to wait. Supermicrocomputer doesn't want to do that. They want to increase capacity so that when customers come, they can go ahead and deliver on that demand, because they're afraid that if they're not ready to serve these customers, that those customers are going to go to competitors instead. They might go to another company like Dell Technologies for their server solutions. They might go to other providers for their server solutions and not wait on Supermicro Computer to be able to deliver their products. So if this demand persists and Supermicro Computer increases capacity in order to meet that rising demand, that just means exponential growth available for Supermicro Computer going forward. Now, the investors that are following Supermicro Computer stock, the Wall Street analysts that are following Supermicro Computer stock, they expect the company will increase its earnings per share by 62% per year for the next 5 years. So the analysts on Wall Street are bullish on Supermicro Computer's prospects for the next 5 years, as the boom in AI is only seemingly just getting started. I've reported on several of these hyperscale cloud computing companies like Microsoft, Amazon, Google, and others that are telling investors that they're going to ramp up spending on AI, that they're going to increase their capital expenditures by the billions of dollars over the next year. And then next year, they're probably going to spend even more than this year. That's what they just finished telling investors in their latest quarterly update. So Supermicro Computer is in an excellent position to benefit from that rising demand for artificial intelligence. Now, Supermicro Computer stock has already increased substantially. It's pulled back a bit off its highs. If you remember, I told investors to take profits when the valuations were near the peak over $1,000 per share. I thought it had gone up too much, too fast, and I told investors to take profits. It's now trading at a more reasonable forward price to earnings of 23, but it's still more than twice its regular valuation it achieved in this metric for the last 3 to 4 years. So you can see here, previous to the boom, it was trading at a forward PE of less than 10. And it's now more than twice that at 23. Earlier, it had gotten over 40, which is when I told investors that it's, too much. 4 times the valuation, that's a little much. A little bit above the previous valuation is understandable because the business is so much better now than it was pre-AI boom. But I argued that it wasn't 4 times better. So now I just have the stock rated as a hold. It's getting better. It's getting more attractive as sales have exploded. Earnings per share have exploded, and the price of the stock has come down a bit. It's become a little more attractive for investors. Still, it is still trading at an over 2 times its regular valuation. So investors should still approach Supermicro Computer stock with caution, because the price of the stock has already incorporated in much of those excellent prospects that analysts on Wall Street are expecting from Supermicro Computer over the next several years. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.